Welcome to Wise Man's Dollar, a podcast for everyday working people who want to make wiser decisions with their money, reduce financial stress, and build lasting wealth for themselves and the next generation. I'm Sunjata, and I'm so happy that you're here with me once again. In the previous episode, we talked about why mutual life insurance companies matter and how they're different from stock owned companies, and ultimately why working with a mutual company is important for infinite banking and for leveraging properly structured dividend paying whole life insurance as a strategy for financial management. Today's episode, we're going to talk about the 8 benefits that make properly structured dividend paying whole life insurance a powerful, powerful asset. So, number one, we have the guarantees. Number two, we have constant compounding. Number three, liquidity. Four, privacy. Five, income tax free transfer of wealth. Six, competitive yield. Seven, monthly cash value growth. And eight, it's flexible loan provision. Those are the 8 benefits. And today we're going to focus on the number one benefit, which is the guarantees. So, most financial tools are built around uncertainty, right? Markets go up and down, interest rates change, jobs change, right? Expenses change, and just life happens, life changes, right? So there's all these changes that are pretty much inevitable all around us. However, properly structured dividend paying whole life gives you a foundation with contractual guarantees. And these guarantees are with companies that have been around for over 150 years and have produced profits for the entire 150 years through world wars, through a civil war, through all of the stock market crashes, all of the recessions and depressions. So, whole life insurance is a really, really stable asset when you're partnered with the right companies, which we talked about in the last episode. So, some of the guarantees that whole life can include are a guaranteed death benefit. So, when you pass and transition, money will be there for your family. How reassuring is it to know that you can make this a decision today to ensure that your family is secure even when you're no longer here? Another guarantee is the guaranteed cash value growth. And actually, let me back up a little bit because if you're just popping in on this episode, I want you to go back and listen to the episode that talked about the difference between term life insurance, which a lot of people have, and a lot of people have bought into the idea of buy term and invest the rest. But in the term life versus whole life episode, I mentioned the fact that I want you to Google that 99% of term life insurance policies do not pay out a death benefit because they're only given to people who insurance companies know, based on historical data, will not die before the term is up. So, unfortunately, unless someone is a victim of a freak accident, a tragic accident, most of the time, 99% of the time, term policies do not pay out a death benefit. So one of the benefits, again, of whole life insurance is that it's guaranteed to cover you when you transition and pass away. Is guaranteed to pay out a death benefit to your family. It's designed to cover you for your whole life, not just a short term that you'll likely outlive. And again, Google that. All right. Another guarantee is the cash value growth. Cash value in whole life policies, especially the properly structured ones that we design for our clients who are interested in infinite banking, it increases according to the contract as long as the policy is enforced because you're paying your premiums. So again, that's every single month the cash value is growing and it's guaranteed. It doesn't matter if the markets are up and down. It doesn't matter if the interest rates change because of the Fed. None of that matters. When you sign that contract and your policy is enforced, the guarantees are laid out for up to age 121 for you to see right there in your policy. And another guarantee is guaranteed level premiums. So, again, one of the benefits is that your premium payment is guaranteed for your life. It's not going to go up as you get older, like some other policies, like, for example, universal life. And then we already talked about term and how that doesn't offer a guarantee for your whole life. So the guarantee that your premium payment is going to be the same for your entire life. And that's if you're doing it for infinite banking, or you listen to the episode where I talked about that, where you can have a floor or a ceiling in terms of some flexibility in your payment. What we're talking about here is that the floor payment, that policy payment, that's the floor. If you're using, I'm sorry, if your policy is designed for infinite banking, you have a base premium that is the same for your entire life, contractually locked in. That is a guarantee that is so reassuring. So, again, to be clear and to differentiate, when you're thinking about, using and leveraging whole life insurance as an asset, as a foundational asset, that it's not about chasing high returns. We're not putting whole life insurance up against ETFs, or trading on the stock market, or having a managed fund or anything like that. This is about an asset that sits in the class of assets, like a money market or a basic savings account. But this one comes with eight benefits that a money market or a basic savings account or a CD just don't have. All right, and we're going to get into that in this whole series. So it's about building, certainty into your life. It's about having a foundational asset that builds certainty and has so many benefits. And, we like to talk about it with the company that I'm with, called Factum Financial. We like to talk about whole life being in that hold category versus being in the acceleration category, like investments are, like the ones I mentioned, or for people who buy, rental properties, or people who flip houses, etc., who are trying to accelerate the growth of their money. Of course, with acceleration, there comes more risk. The benefit of that category, which we call the hold category, like the savings account, the traditional savings account, regular bank account, or holding cash on hand, etc., is that you reduce risk. And the reason why we love whole life insurance is because it comes with the eight benefits, in addition to giving us that stability. So with whole life, it's about savings, it's about liquidity, it's about having cash reserves, and it's about having a place for long-term storage of capital. Okay. So in terms of an everyday analogy, think about, the idea of building a house, right? So when you're building a house, you want to have, or let me say it like this, you don't want to have a foundation that is shifting every year, do you? Right? You want a steady foundation. And yeah, the walls, the furniture, the decorations, all those things can change, but the foundation needs to be strong, it needs to be stable, and it needs to hold. So again, investments can go up and down, business opportunities can change, income can fluctuate, but your foundation should always be dependable. And that's where this asset called whole life comes into play. So let's talk about why the guarantees within whole life matter for everyday working people. So first and foremost, they reduce uncertainty. They create stability. They help you plan. They create confidence, and they give you something to rely on when life happens. And by something, I mean that cash value, those cash reserves that are growing within your policy. And some real life examples, and some of the things that I know of other people who have used their cash reserves to help out when life happens, is when they lose a job. And folks have used their cash value to help sustain them, in between that transition. Or it could be used for things like car repairs, medical expenses, or just, business, the slow season of a business, a family emergency, or just having a reserve of cash when opportunity emerges to invest or buy an asset. A lot of people use their policies for that as well. And of course, when it comes to life, it's not a matter of if something's going to happen, it's a matter of when a life event is going to happen where you're going to need those cash reserves. So, next, let's talk about some of the things that a lot of people get wrong when they're thinking about life insurance and how it can be, used within their life, or if they're even considering using it in these ways that we talk about on this podcast. So, one of the mistakes is thinking guarantees are boring. you know, Boring and stability can be really, really valuable. Yeah, it's not as flashy as, the crypto videos where they're talking about all this massive growth and all the Bitcoin craze and everything that has happened in the last 10 years. Or again, the latest, greatest stock advice and people who are just looking for that little edge so they can tell that story about why, I'm sorry, about how they were in early on, this stock or that stock. I remember my father-in-law, my when I was married, he used to tell the story about how he passed on Google and how upset he was that he did not invest in Google early on when someone came to him about that opportunity. Guess what, y'all? When it comes to the guarantees and whole life, it's not that exciting. It's actually pretty boring. But guess what? Boring creates stability, right? There's no risk in boring. Predictability matters when life gets unpredictable. And that's what this asset gives you. It gives you predictability. Mistake number two, comparing guarantees to investment returns. Something I said early on in one of the earlier episodes that you'll hear me say moving forward often is that whole life is not an investment. It is a financial foundation. It is an asset. Assets and investments are two different things. It's cool because it's an asset that does earn interest. It's an asset that does earn dividends. So there's growth, but it's not an it's not an investment. All right. So it's important just not to compare the two. So that's a mistake that a lot of people make. And another mistake that people make when it comes to whole life is only looking at the cost. Yes, whole life insurance is more expensive than term insurance. But the better question that people should be asking is, what value does it give me? And again, just go back and listen to the episode where I talked about the differences between term life and whole life to get a better understanding of that value. So, ultimately, when we talk about benefit number one, the guarantees that whole life offers, guarantees provide value because they create certainty, they create control, and they create stability. All right. So, for me, one of the things that was really powerful when I first stumbled across this concept of infinite banking and understanding the value of properly structured dividend paying whole life insurance is that I was in a headspace where I was like, man, I really want to accelerate my savings. I really was starting to think down the road to retirement and just thinking about some of the things that I can do to do that when this came into my world. And when I learned about the versatility of this asset and learned about the idea that if I decide to leverage this as a retirement vehicle, that my retirement funds would be guaranteed. It was life changing to be blunt because I was hesitant to invest in the stock market. I've always been hesitant. I've dibbled and dabbled in like mutual funds in my early 20s. However, in terms of long term strategy for retirement, I was skeptical, okay? Because I remember 2008, 2009, 10, 11, 12, people being on the news, all these stories about folks losing their retirement and not being able to retire because the funds weren't there because they just happened to reach retirement age during a recession, during a stock market crash, etc. And we just never know when that's going to happen. So for me, that's just not something that I wanted to risk. So the guarantees that are offered within this asset really, really, really meant a lot to me. So as we tie this up, and close out, the key takeaways are that guarantees are powerful because they create certainty, and certainty creates confidence and peace of mind. Financial peace is something that I want for myself and I want for all of you as well. And lastly, the beautiful thing is with whole life, those guarantees are contractual. Once you sign that paperwork to implement your policy, what you get is laid out for you in terms of growth, etc. So I hope you all gained some valuable nuggets from this episode. And in the next episode, we're going to jump to benefit number 2, which is talking about how your money can compound without interruption within this asset. So, thanks again for tuning in to another episode of Wise Man's Dollar. This show is designed to spark curiosity about how people can take control of their money, relieve financial stress, and create intentional wealth using properly structured, dividend paying whole life insurance and the infinite banking concept. If you'd like to go deeper, visit go.factomfinancial.com/Sunjata. That's my first name, Sunjata, for free access to a growing library of educational videos and resources. And you'll find that link in the show notes. If you enjoyed this episode, hit like, subscribe, drop a comment, and share any questions you may have or anything that resonated with you in this episode. And remember to share this with someone you care about because knowledge grows when we pass it down. And remember, like my granddaddy always said, any man can make a dollar, but it takes a wise man to spend it. I'll see you in the next episode. Peace.